Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in today's video we are going to talk about one of my all-time favorite companies. This is a company that I own in my portfolio because I genuinely like the company and the products and so on. It has one of those businesses that you know, if I tell you what it is, you will know exactly what it is. There's no ambiguity about that. And it has done well over the last whatever years. It's been around for a very, very long time. And I think it will be around for quite some time as well. So I'm going to share with you some information about the company, the financials, the estimates moving forward, the valuations, and then I'm going to give you my opinion on where I think the company is right now in terms of valuation, as well as, of course, what I'm going to do with it moving forward, inshallah. But before we do all of that, just press that like button because it genuinely helps the channel. That's all I ask. Okay, if you could do that, that would be absolutely wonderful. If you haven't joined us in the basically on this journey and you haven't subscribed to the channel, of course, what you're waiting for, do that as well because it really helps the channel. And of course, the other thing that helps the channel is if you can join us in the Patreon account where you get access to all of these things that we basically provide, as well as the Sharia compliant investing ebook. And you get access to a Discord where you've got a lot of brothers who are sharing excellent practices every single day, their buys and sales and so on. And I also include my buys and sales and everything else in news and so on, inshallah. It will cost you about 50p per day if that's what basically if you join us, inshallah. And that definitely goes a long way to help the channel, inshallah. Right, the company we're going to talk about today is Union Pacific Corporation. This is one of the companies that have been around, like I said, for a very, very long time. Now, you might be wondering what does this company do? This company owns loads of basically road. So they are a railroad company. They own a lot of these trains that basically transport goods from A to B. And so they've got different sectors. So I'm going to quickly show you. So when it comes to bulk, they actually transport all of these things, okay, whether it's biofuel or fertilizers or food and refrigeration products, renewable energy, and so on. They also have different sections where they've got the industrial side of things. Okay, so these are the types of products they will actually ship, including waste, including plastics, and so on. In terms of premiums, okay, brand new cars and parts for different cars and all of these things. This is basically stuff that needs to be moved from one state to the other in the US and also in Mexico. So they have a market in Mexico as well. So it's a really interesting business, very simple to understand. But one of the things that I'm gonna mention in straight away is this is one of the businesses where it's quite cyclical. So if the economy is doing well, everybody's ordering products online and so on, and we are trying, moving from things from China to whatever Mexico, from basically moving in between different states and so on, then this is the company that's needed to transport those goods. But if the economy is not doing well and people are not buying these products, okay, then of course this company will not do well because nobody is actually buying products and no one is transporting anything. So that is something to bear in mind. Also, there's a union bit involved as well. You have to be mindful. So those between the unions and being the business cyclicals, sometimes this company goes through years where the company has not actually performed as well as it should have. Now, one of the reasons I'm actually bullish on this company is the CEO is now gone. We've got a new CEO, and hopefully in the next few years, the things will start to change, especially precision scheduling railroad, where they're trying to make more efficient way of basically delivering goods to customers and so on. So that we'll see what happens, because Canadian Pacific and others have done similar sort of a thing. And so when it comes to PSR, so we will see how that goes for this company, inshallah, in the next few years. Now let's have a look at the financials. So that's just to give you a bit of information about the company. So year to date is flat. So everything else has done well in terms of the S&P 500, but this company has not done well at all. So it's been flat for the year to date, so just about 2.5 months and so. For the 1 year though, it's up 32%, which is really nice. And for the last 5 years, this company, just the price side of things, 53% up. And for the last 10 years, you would have had 166% or 167% up if you had this company in your portfolio for the last 10 years, which is really, really good. It's that steady eddy kind of thing. Now forward PE is about 22 right now. So let's have a look at a little bit more information about the company. It has market cap of $151 billion, dividend yield of basically 2%, just over 2%, and that dividend yield basically is very safe because they do have some free cash flow that they actually use to pay off that dividends and so on. Payout ratio is only 50%, so it's not bad at all. Well, hopefully it will come back down. It was slightly lower, but now it actually has low for the most companies, but apparently according to these type of businesses. And they have not increased it recently, but they have increased the last 5 years about 11% and the last 20 years about 16%, which is really good to see. Now, as you can see here, every single year for the last since 2004, they have been increasing that dividend, which is very, very nice to see. And 17 years of paying that dividend and increasing it. So a consecutive increases, whereas 25 years without reduction. So 25 years they've not cut that dividend, and I don't think they have any plans of cutting that dividend anytime soon. Quarterly paid $5.20 yearly, so annual payout is $5.20 for every share of this company that you own, which is quite nice, right? So in terms of valuation right now, from looking at the dividend yield theory here, you basically says reasonably valued, and the reason is because the 5-year average right now is 2.17%, and the currently is basically 2.11. So for that reason, it seems actually reasonably valued. Now, in terms of PE side of it, it's about 20. The 5-year average right now is about 22. So based on PE, it's quite expensive. The industrials normally trade slightly lower multiples, but this one, it seems a little bit pricey right now. I'll tell you exactly what I think of in terms of valuation at the end. So earnings per share and payout ratio, is right now below that 60% that we're looking for, and free cash flow payout ratio below that 60% as well, which is quite nice. So that has come down quite a bit from where it was before. Earnings per share is nicely growing. Like I said earlier, it's a very cyclical business. So some years is up, some years is down. So it seems next year we're actually coming back up again to where we were about in 2022. So it will be interesting to see what happens. Free cash flow per share as well is increasing from $3.39 to right now $9.71. In terms of buying back their own shares, this is one of the best companies when it comes to buying back their own shares. They have been buying back since 2014 every single year, as you can see, which is really, really nice. And total sales, again, like I said earlier, is very cyclical business. 2014, it will basically have $24 billion of revenue. Right now, basically in 2024, we're looking at almost 10 years later, the revenue is almost basically exactly the same where it was, just basically slightly higher. So that's why one of the reasons that it's very cyclical. And I think a lot of this to do with the company has not done in terms of innovating, if you like. So hopefully we'll see with the new CEO, because of what's happened with Union Pacific and Canadian Pacific and others, okay, which have now basically merged with other Kansas as well. Those two combined have now taken, the US, Canada, and Mexico. So they're basically transporting goods from all of these different countries. So we'll see what happens. We'll see what basically the new CEO does, because one of the reasons people were not happy with him, it was because of this. In terms of growth side of the business, has not done well. So we'll see what happens. Return on equity, we're looking at about 47% right now, and return on invested capital, we're looking at about 15%. The operating margins about 38%, which is really nice, and free cash flow margin of 20%. So in terms of profitability and what basically the management are doing with the money, is absolutely fine. And in terms of debt levels, we're looking for below 3, and right now it's 2.59, which is absolutely fine. Now looking for the estimates moving forward, okay, it's about 8% next year. That's what they're expecting for this year, and then 11%, 8% after that, 17%, 9%, and so on. In terms of EPS, in terms of revenue side of it, 3%, 5%, 3%, 5%, 7%. So it's not bad at all. Okay, so this is, again, you can't expect this type of business to grow double digits every single year. So it is doing what it's meant to do. And now if you look at the next year, they expect earnings to grow about 13%, and then every year after that about on average about 10%, which is what I need. Okay, that 10% every single year, steady Eddie, you get your dividends overall, you get your 10 basically percent. If they can grow this and hopefully will help the business, of course, then that will help me as an investor, and hopefully the price will go up because of this growth side of things, inshallah. Now looking at valuation side of things, so Morningstar is saying 17% premium right now, or expensive. 2 basically stars right now. $212 per share is where they think the price should be. Right now it's $248, so not far off, but it's about 17% right now. The company has a wide economic moat, and if we look at the trailing 12 months, I think trailing returns in the last 10 years, we're looking at about 11%, 12%, which is basically absolutely fine. Nothing huge, nothing basically huge to worry about in terms of that. Now going back and just checking the ratings from Wall Street here, you can see there's 14 buys here, 14 strong buys, 4 buys, 9 holds, 2 sells, and their price target is 257. That's about 4% from where we are right now. Now looking at the valuation, so we've taken Morningstar, we've taken Seeking Alpha, as well as Wall Street, Simply Wall Street. I've included dividend discount model as well as a multiples evaluation model. All of that combined average out 256 is the price that we got for intrinsic value, average intrinsic value for this business. Current stock price is 246, so that's about 4% upside from where we are. If you think this company is very cyclical and you need that 10% cushion here, you might want to say, you know what, $230 per share is probably the best. Okay, if you feel like maybe I need more, then you can do up to 15%. And if we see some sort of a correction, this is where Morningstar almost is. So again, that should not be bad. 15% basically down from where we are now is not basically huge ask, and if we see a correction in the market in the next 12 months or so, then potentially you might get it. That I remember when I was buying this company, so quickly finally show you. Okay, right now $295 per share is my average. So I was buying around basically around just below 200, just around that time, and I've had this company for a very, very long time. And if you look at my overall right now, it's actually 5th biggest company that I have in this portfolio. But so it will be interesting to see. Look at this, by the way, Qualcomm is actually now become the 2nd biggest stock or company that I have in this portfolio, which is absolutely crazy. So what would I do? I think genuinely I would not be buying right now. I'm just going to hold on to what I have. I'm not selling it, definitely not selling it. And it will be interesting to see what happens moving forward. If it comes back down again, I would like to buy more, at least another 4 shares or so, just to round it up to about 30 shares. So for now, I'm going to leave it alone. And if you're, of course, interested, do your own research, find out a bit more information. And before we finish, thanks to one of the brothers, I should have done this before, that I mentioned, you know what, some of the stocks that we've talked about recently, individual stocks, he asked basically if we can do the Sharia compliance side of things. So here you are. Okay, so 90, almost a 90, basically 100% when it comes to business side of things. 23 in terms of almost interest-bearing debt, and then interest-bearing securities is almost non-existent. So I'll keep doing this, inshallah. If you guys enjoying this type of content, I really would appreciate if you can just press that like button. It, like I said, it takes a lot of time and effort to put these videos together. And alhamdulillah, because it's Ramadan now, I've got, you know, of course, doing my ibadah and everything else, but at the same time, I'm just doing a little bit more, just as much as I can, just do those 10-minute videos as you know, every single day or every other day for you guys, inshallah. Anyway, have a wonderful day. Assalamu Alaikum.